Hi everyone, this video is about brokers and hedge accounting. How do you choose between brokers? Like you're checking the pricing with them on a regular basis, not on a regular, on some cadence you're comfortable with once a month, 3 times before the trade. Then you're testing with limit orders. But here I want to explain why. Why do they charge you differently? Let's consider two brokers. One is major bank, and you are small as a client for them. Another one is not a bank, it's just pure FX broker. You're quite of medium for them, and the one that is not a bank charges you more, and by more I mean really bigger amount in terms of forward points. For example, for the Euro USD contract with the value date in 1 year time, they charge you 100 basis points more. For 100 basis points, I will just briefly explain what does it mean. It means like the difference. Say bank has the rate 1.2 and broker has a rate of 1.21 in 1 year. Let's say it's March 31st, 27. So the difference is that, and it's huge. For example, if you're buying 100 million euros in 1 year time, €100 million. The difference will be €1 million. And this is only for forward points. Like, I mean, you are not sure with the spot rates. And this is the real example. Here, like, I was really curious, why is that happening? What might be the reason for such pretty big difference here? And I've checked with several of them, and in random conversation, like, it wasn't from the start that the broker explained me what was the reason. But the truth is they charging for additional services and for credit risk. Additional services, in our case it was hedge accounting, and credit risk is when you do not put any margin with the broker. So basically at the start day, you're just telling them, hey, I will buy that much of euro in 1 year time, and you're not providing any money to them as a pledge for that deal. So they are kind of uncovered if you will not fill your obligations. Okay. This is for credit spread, and once your volume increases, they increase that credit spread, and they put it into your forward points here. And this is real spread. I mean, I see that between brokers. So the difference might be that big, per 100 million euros. That's substantial. Okay, that's understood. The next one, But the bank also has the same situation. So it's apples to apples. They both charge for the credit risk. The second one, they provide us hedge accounting. Okay, hedge accounting is a good feature, but it doesn't cost 1 million euro. If you go and buy at the market, not euro, dollars in that case. If you go and buy at the market, it will cost you between $30,000 and $150,000. So you see the difference is tremendous, and you should be careful with such things, because it's really easy, and a lot of people tend to fall in that trap. It's easy solution, out of the box. You actually bind everything into one pocket, and it goes differently within your budget process. That's a trick. No one tracks your forward points when you're budgeting as a company. But if you will ask for the consultant's help, say for 100K USD, you will go through a lot of steps of negotiations and approval before you can get that help. But you should always keep that in mind. You should always keep that in mind that nothing comes for free. If broker provides you that additional service, he will charge for it. He will charge for it, and you will not be happy with the price he charged for it normally. So consider this. What I'm doing, I'm preferring to have hedge accounting in-house. In that case, you are covering all the control, all of your process, and you're independent. You can choose between brokers, you can negotiate with them, you can tell, hey, I don't need any other services, I need just my bid-ask spread, your bid-ask spread, and credit spread, and that's it. Provide me the best possible price, I don't need anything else. And if you have big volumes, you will be better off with that approach. And it's also useful in the sense that you're controlling your timing when you're closing your books. You're not relying on other person's expertise. You just have your process, and that's it. And you can train your team. It's not that difficult when you have plain vanilla instruments. I'm speaking about forward contracts, options on currencies, and collars. Accounting is not that difficult. I will provide a series of sessions dedicated to accounting process, how to make posting, how to prepare all required documents, how to write the disclosures to financial statements. So yeah, wait for it. But the reason why is exactly because of the price. This is the starting point, 1 million euro. Sorry, I don't know why it's euro. We are multiplying here by 0.0 USD per euro, so it should be USD. I apologize for that. So it's worth it, and it's pure difference between two brokers, between bank and broker. I specifically put the bank here because banks do not provide that additional service. They are not allowed to provide that additional service because of regulation. Small brokers can. Okay, cheers. See you soon. Wait for the accounting sessions. Really happy to deep dive into that. I love it.